Hi everyone, and welcome to the September 2024 edition of my monthly real estate market update for the Twin Cities. After a summer of nothing too exciting to report, this month I've got some big news to share. If you haven't heard about it already, here it is. Interest rates are falling! Actually, interest rates have already fallen. Even before Federal Reserve Board Chairman Jerome Powell's announcement later this week, home mortgage interest rates are down almost 2 percentage points from their peak last October. And that is some good news for home buyers and home sellers. Really good news. Home buyers, many of whom have been sitting on the sidelines waiting for 2 years, should begin coming back into the market this fall, and they're going to be coming back with greater purchasing power. And home sellers, that means more buyers for your home and more purchasing power for you when you go out to purchase your next home. All right, I'm going to get more into the details in a moment, but first, if you haven't met me yet, my name is J Trout Lowen. You can call me Trout. I'm a Minneapolis realtor. I help home buyers and home sellers navigate the ups and downs of the Twin Cities housing market. Each month, I take a look at real estate activity in the 7-county Twin Cities metro for the previous month, and I talk about trends and what they mean for home buyers and home sellers. Now, if you like what you see here, I hope you'll give this video a like. And if you want to see more of my videos on buying and selling homes in the Twin Cities, go ahead and hit that subscribe button right now. All right, I'm going to talk about market activity in August in a minute, but really interest rates are the star of the show this month. Let's rewind the clock a moment. March 2022, when the Federal Reserve Board, concerned about rising interest rates and inflation, decided to raise the benchmark interest rate, the rate at which banks can borrow money. They wanted to slow the economy down. And their action really put the brakes on what had been a house on fire housing market, which was probably the intention. But as rates rose, we saw the real estate market slow to a crawl. In 2023, we had the lowest level of home sales in the Twin Cities metro in more than a decade. Many first-time homebuyers got pushed out of a market that had already seen huge increases in home prices during the pandemic. But the biggest impact might have been on move-up buyers, many of whom had purchased or refinanced when rates were in that low 3% range. And those admittedly terrific rates have been keeping those folks stuck in place. All right, so fast forward to this week. The Federal Reserve Board is expected to announce its first interest rate cuts since March 2022 at the end of the week. But rates have already fallen, and that is a significant impact on home affordability. And you can see that right here. I've done a simple calculation of what it would cost on a monthly basis if you purchased a home at the median home sale price in the Twin Cities metro last fall, earlier this spring, and this month. To simplify this example, it doesn't include taxes or insurance. This is just the mortgage payment. But what you can see here is that if you bought a home for $377,000 last October with 20% down, your monthly mortgage payment would be about $2,192. If you purchased that same house this month, you'd be paying $355 less a month, or about $4,260 less a year. That's not pocket change, folks. And the change in interest rates doesn't just impact the monthly mortgage payment. Lower interest rates allow buyers to shop for homes at a higher price point. So if buyer X was shopping for a home last October and needed to keep that monthly payment at about $1,860, they would have been looking for homes priced at or below $320,000 last year. This fall, that same budget would allow buyer X to shop for homes up to $377,000. That's a pretty big change. All right, so we really haven't seen the impact of falling interest rates in the market yet, and part of that is seasonality. The last few weeks of August and early September, we tend to see a drop in interest in real estate activity. But if you're thinking about buying a home yet this year, you should be paying attention. The next month or so may be one of the best times to purchase a home in the last couple of years. You're going to be able to take advantage of those lower interest rates and the slower fall market when there are more homes available to choose from. So let's take a quick look at what's happening in the market, starting with the number of new homes listed for sale. There were 4,900 new homes added to the market last month in the 7-county Twin Cities metro. That was about a drop of about 8% from July. And that seasonality I was talking about, it kind of shows up here. But it was also down about 3% from last August. Although fewer homes were listed for sale in August, the total number of homes on the market stayed relatively flat from July to August, and it was up about 14% from last August. There were almost 1,000 more homes on the market in August than there were a year ago. Now, while that may sound like a lot, it's still about 2,100 fewer homes than were available for purchase in August 2019. So while the market is slowing down, it's still a pretty strong seller's market. And we can see that when we look at months of supply, which measures how long it would take to sell all the homes currently on the market if no new homes were added. The month supply in August was 2.5. But a balanced market between buyers and sellers is somewhere between 4 and 6 months of supply. So still a seller's market. The number of days it takes to sell a home also increased in August, 14 in July to 19 last month. It's still a pretty quick time frame though. Even with the market slowing down a bit as we come to the end of summer, home prices continue to edge up. The median sale price for a home in the Twin Cities metro was $377,500 in August, and that's up from $368,000 in August last year, or an increase of about 2.6%. Home sellers are still getting between 99 and 100% of their asking price. Now, condo sales continue to be the sluggish part of the market. Median days to sell for a condo is 38, and that's about 12% higher than it was last year. When we look at price brackets, the biggest growth in the number of homes listed for sale in August was previously owned homes priced at $800,000 and above, which was really actually the only price bracket to see any growth in new listings last month. But when I look to see where the greatest growth has been overall in terms of inventory of homes for sale, the under $300,000 category really stands out. The number of homes for sale in that price bracket was up by 30% from the same time last year. That, coupled with falling interest rates, is good news for first-time homebuyers, and they've really needed some. So just quickly to recap, interest rates are the story this month. Home mortgage rates on a 30-year fixed-rate loan have dropped by almost 2 percentage points since peaking in October of last year. That is boosting affordability for first-time homebuyers and should make it easier for those rate-locked move-up buyers to take the next step. Homes for sale inventory is up, but it's really not enough to make an impact on home prices. So if you're thinking about making a move, this fall may be the sweet spot with better affordability and more availability of inventory of homes for sale. That's what I have for you this month. Thank you so much for watching. I hope to see you next month.